The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour. It is the 19th day of March. My pleasure to be here Monday through Friday, noon until 1 p.m. Eastern Time. The Dow is down very sharply. Let's look at the E-mini right here, because then I can finish that off. There's a technique in the Chapman wave methodology that we always use. It's basically looking for the most identifiable lowest low, and then merely counting each successively higher peak, alphabetizing them on the way up with uppercase letters. It can go to a G, but it's the fourth highest peak. A, B, C. Peak D is where other things can happen. It is so important. Majority of times, that is where you get a reversal of consequence. If you're going to, you can go higher, but D is where you want to be aware that you're going to take your foot off the accelerator, hover over the brake, and probably get ready to put on the brake, at least short term. What do we have in the E-mini? There was a top on the 29th of February at, I forgot to type that in. In the E-mini, this is the June contract, 28.83.25, plunges down to 25.32, has a rally, goes to another D. That was a peak D, goes to another fourth highest peak D at 2807.25, has reversed very sharply over a course of 4 sessions, started off slow, accelerated today, almost like a one-to-one to the downside, trading down 38.50 at 27.17. The weekly chart made a peak D, and it's got an arch. This is the arch formation that comes from the pattern that we call in the Chapman wave methodology, the H, the lowercase h formation, the dreaded H. 120-minute chart has just plunged way below the 200-period exponential moving average. And I would say to you that right here at about this level on the E-mini, this is about where we've made a low of 27.13.25, trading at 27.16. This is about the time of the day and at the price measurement in the 10-minute chart that suggests here we might see a little bit of a bounce. This is the opportunity right now. The market better take it, because otherwise we could even see a 2-to-1 day where the price at noon gets doubled by the end of the day. I'm not sure today's the day that it can do that, but it has all the characteristics, and I'll go through it right now. So let's go through to the E-mini, and what we're looking at is sell mode is in place in the daily, sell mode is in place in the weekly chart, and the monthly chart is at ES. Right, here's the monthly chart, the continuous contract. Let me get rid of this right here. You see we've made a peak D. So this is very important. Remember the candle, the Chapman wave Roman candle? I'm not going to discuss it now. Maybe we'll go into it later in the show. Okay, now let's go through the nitty-gritties. The Dow. A week from today, first thing in the morning, at the opening, we went short. We had a peak D way back on the 26th of January from the 26,600s. Plummets over 3,000 points to 23,360. Rallies again. This time it goes to a peak C. Starts off making a declining trend line, and that trend line resistance has been quite brutal, actually. Most of the indices like the S&P made a peak D right here where it's got a C. And what's really important is that we decided that we would go short. I decided. My subscribers to my opening call went short Monday a week ago. Not a big deal so far, so we're short in this area right here, around about 25, I would say. I think we were short about 25,400-ish, and we're now trading at 24,629. This is leg B to the gray leg B to the downside, but we've broken that trend line support. That's going to be very important. Here's the H pattern in the weekly chart, a peak E, not a D, but an E. Just a fractional D at 25,295. Very next week was 24,876. So not even just 400 points lower, then it moves up again. So this is going to be very important. And the monthly chart has made a peak E. I'm kind of I'm a little nervous about these Ds and Es in the monthly charts. So in the meantime, down 322 at 24,624. It must hold the 24,006 was already taken out the left side low. So it has to now hold the 24,580s. Otherwise, it's going to go a lot lower. This is about the area where intraday we need to see some kind of a rally. So we're going to be watching this. Resistance now is a 9-period moving average of 24,885. S&P, SPX.X. There we go. S&P is down 39. Let's call it 40 at 37.12. Made a peak D. Made a peak F at the 26th of January high, 28.72. Made plummets down to 25.32. Rallies up to 28.03 at 28.01.90 on the 13th. And now has had 4 sessions, basically red. Actually, it's had 6 red sessions since the day before that. So it's not good. And there's that arch formation in the S&P. Must hold 26.96 today or tomorrow. Otherwise, it goes much lower. Got that H pattern all in place. And the resistance now is the 9-period moving average of 27.41. The QQQs. So we went short the Dow at the opening on Monday. We went short the Qs and NDX 100 power shares, QQ2 trustees, as I mentioned on air on the morning of Tuesday. This is where the high of 175.21 on the 13th was met with an open the next day at, we went short the day of the high, all-time high. Just off the top, 175.21 is the high on the March the 13th. We went short at the opening or just pre-opening that morning, and we're still short. So this is, now, these moves on the upside in the inverse. So I say we weren't short, but actually we went long. I like for my subscribers, we do have a short, we have a couple of short positions, but the short that I like best of all is when we're able to buy the long position. In other words, the ETF is made up of a short position. You go long, you can go long your IRA or whatever. You don't have to worry, you don't have to cover anything. You just go long and put your stop in. It's a nice, I think it's in some ways it's a nicer way to do it for some things, maybe not for others. So we're long the 3 times short version of the Qs, the SQQQ. So day's young, it's a big deal. It's up 8% already. Hey, anything can happen by the end of the day. But at least we were lucky that we've got a cushion. That's the reason why I think I spend so much time trying to time these turns of the upside and the downside, because it gives you such a nice cushion. You remember on the 6th of March of 2009, when we went along the Dow at the exact day of the low, the historical low, it gave us such a good cushion because I was anticipating there should be a cup formation with a retest, an internal low, and then a residual low. In fact, it was just an internal low. There was no residual low. And that's nice when you got the cushion. So at least for the Qs, we've got the cushion of getting just fractionally off the all-time high on the short side. It's better that way. Let's put it that way. Okay. So QQQ trading at 166.38, down 4.68. I'll go on with this because this is a really important session. Last week I considered it an extremely important week. Today's an important session to see if there's a follow-through downside move after Friday's action. So this is going to be really important. It gives us very clear parameters. Basil Chapman, I'll be back out.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petrocurrencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So this is going to be important. You see the IWM at this particular point down 1.41%, minus 2.25 at 155.55. I have not been able to put a down arrow because it hasn't closed decisively under the 9-period exponential moving average. The MACD is turned down, but hasn't crossed negative. Stochastic now is under 80%, at 74%. So I'm real close to putting a down arrow. That's going to impact the weekly chart, and we'll see if the weekly chart on Friday is able to close above 155.20. That's the 9-period exponential moving average. So that's the IWM. Now, this is going to be very important. Gold was down earlier. It's now unchanged. It's really working hard. I suspect there's a chance that over the next few days, if the market continues this volatility, that is meaning downward move, I suspect that gold is going to be coming back as a potential safety haven. I'm not sure about the gold stocks per se just yet. They're not acting very well, but maybe gold itself could rally somewhat. Somebody watching this very closely. The dollar, so gold is down, unchanged right now, 1312. It's down from the 9-period moving average of 1319.5. Our weekly chart is not very strong, so it's going to have to be an emotional move to the upside, some kind of sentiment thing. And I'm not seeing it technically yet. If you look at silver, I was asked about silver. Sure, silver is very weak. It's down 0.02 at 1624, making yet another arch formation. Wow, I must just tell you, if silver closes under 16 this week, that's just not good action. It's going to handicap gold's upside. High-grade copper right now, high-grade still weak. Looks like to me, remember, I wanted to see a test of the 3.05. It's a 3.08 right now. That's the 200-period exponential moving average support. We're looking at the dollar right now. Dollar really wasn't moving very much. It's now down. It's down 21. Both gold and dollar and silver, they're all stuck in that high-grade copper. They're kind of stuck in a range. Until we can break the range, I need to see the dollar at 91.20s or higher, and then I'm going to say, oh, okay, I think now dollar can actually move better. Crude oil right now, crude oil was trying to rally. It couldn't. It's now down 52 cents to 61.89. Same thing, range bound. The arch formation, the weekly is the thing that I'm a little nervous about. If you look at the USO has the same pattern. It's actually holding a little bit better than crude oil. It's down just 3 cents. Yeah, let me make it simple. USO is United States Oil Fund, ETF. If it closes in the next 2 days above 12.80, That's going to be very positive. If it breaks under 12.15, not good at all. Okay, so now I'm missing the TLT. The TLT, this is going to be very interesting. So you see the TLT is having a strong session today from off the 9-period exponential moving average low, but it's still only up 9 cents at 119.90. However, it is holding. If you look, now we can go to these things. If you look at the white one is the 30-year TYX, 30-year T bond yield, trading down 10 cents. Off the lows of last week, holding okay, but if you really want to see yields climb, you need to see it go above last week's high, and last week's high was 31.60. So it's got a way to go, 90 cents. Now, if you're looking at the 10-year, the TNX, it's down, but it's kind of within a range. It's at 28.37, it's down 11 cents. The brown one, the TNX. So that's going to be very important. And the FVX, the 5-year cyan-colored one, also, these two have made peak Ds. It's only a peak C for the weekly. I suspect it will go to a leg D, but it could take a little time to do that. That would be above 32.21 in the 30-year, and it's at 30.73. So I'm watching these yields really closely, and it is impacting, look, it is impacting the Philadelphia Housing Index. I show this to my subscribers every weekend. I show them the wood, which is the iShares Global and Timber Forestry ETF, went to a new high in a V-shaped formation. So this, I'd say, probably about I'm thinking that if wood closes down 2 points this week, that's going to be a big negative. If it closes up even a point from here, that's going to be a big positive. And we're going to be watching these very closely. Now, I wanted to go through a couple of things. In the context of what I'm looking at, what are you looking at was the question. And the answer is, I can't see emails. I'm sorry, it will be fixed in another couple of hours. I've got the very old one because I love it so much, and that is Outlook Express. It just does everything I want. I've got all the newfangled stuff. I don't need it. I just want it to work easy, and that's what it does. So something happens, and now I've got to get it fixed. So it's the same thing with my other one, which is also a very simple version. So I kind of stuck. I can't get your emails. I'm sorry. I'm just going to guess at what the questions are right now for some of those that have gone to my TFNN account. The other one, I'll get some of those messages. Let me just show you here the little E-mini. Here is this turn that I was talking about. It's at 27.15. You've got the 2-minute chart right here, leading the 5, leading the 10. You see the green. You see this, the green bars. One green bar right here at the low of 27.11. Oh, 27.11 round number, and now it's trading at 27.15, up 4 points, nearly 5 points. I think this is the move that says there's that lunch hour relief bounce, and if this starts to fail, watch out for the afternoon session. I think a chunk of the work has been done, and I'm going to go through everything in a moment. So you need to be looking at different sectors. Yeah, I was asked about Intel. So Intel trading right now is down 1 at 50.17. Made a peak F in the Chapman Wave weekly, monthly. Oh, the daily is at a peak F. The weekly is in a leg E, and it could be a peak E at 53.78 high. And the monthly is in a leg E. I think the semiconductors are a little bit vulnerable at this particular point. Trading at 108.63, down 2.78. We went short the SMHs on Friday. So we'll see what happens here. The vehicle reviews is up 8.5%. That's a big move for a day. I'm sure it's going to give some of that back. But it's just nice to be able to get into something near the top. I wanted to short the very day of the top, and I said, you know what? I've been right on the last moves for the semiconductors recently. I don't want to be wrong again. We had been wrong for small losses many times. So I needed to be a little careful, and we were careful, and we'll see what happens now. So if you're looking at the XLK is the S&P. I spoke about it last week. The S&P Select Tech Spider Fund made a peak E. I couldn't put a down arrow yet at 71.34 on the 13th of March. Trading right now at 67.98. it's under the 9-period moving average. The MACD's cross negative, stochastic's way down 67. Probably by the end of the day, I'll be able to put a down arrow, and that'll imply a sell signal. There's a chance it could upgrade immediately to a sell mode in the daily, but I'm only going one step at a time. And a peak D, there's that D again in the weekly chart. Leg C only in the monthly, and that says the monthly should still go higher. Maybe by the summer we get a pretty decent rally, and we'll see. So that's the XLK. Couple of questions I had now. When I look at the IYT at this point is down $1.48 to 191.75. It's only made the peak C, but it's making the double arch formation, the one I call the lowercase m. Lowercase h goes to a lowercase m. I think that's the case here, but actually it's holding pretty darn well, holding the 9-period moving average, and that's still quite good. Stochastic's weak at 70%. I'll be back. Basil Chapman, Tiger Technicians Hour. Enough to take your call.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So the question has been, for me over the weekend, what sectors do you think will hold up well if there's further weakness? And my contention has been that if yields go higher, and they look like they want to. So let me just talk about this. I believe for a long time, 20 or more years, more than that, that at some point our market would force the Fed to lower rates, like the Japanese. I call it the Japanization of our bond yields. And then we too would eventually reach zero. over the last 2 years, what I've been saying is, yes, we've gotten to zero, pretty much zero. But the difference is that the Nikkei Dow failed to rally for over 10 years. It just didn't go anywhere. It just kept going down, then went flat and went sideways like a rectangle formation. We rallied. We went from that low of the 6th of March in the Dow, the 9th of March in the S&P of 2009, 3-4-fold in some of the indices. There's a big difference. Now I think we have to consider that we're likely to get some kind of inflation, and at some point that inflation could accelerate very sharply. So within that context, if I'm looking at the TLT, perhaps being under pressure, that 31-year bull market in bonds, having this lowercase h pattern and having failed at the low in the monthly chart of the TLT, the iShares 20-year Treasury bond ETF, and if the TNX, which is the 10-year yield, very long-term yield, has the potential, having broken the 31-year down channel resistance. This is going back to 1990. Oh, this is 1995, huh? Let's go back further. Look, that channel itself started in 1987. So that's 30 years ago, right? 40 years ago. 30 years ago. Right. 98, 2000. Yeah, 30 years ago. What we're looking at is the bull market in bonds started back in September of 1981. That's what I was thinking of. So now what we've got is the actual channel from 1987 has just been pierced to the upside for the very first time. Now, I need 2 months at least, at least 2 months to have this 10-year Treasury note give me real evidence. We've been here before, obviously, because of the declining trend line, that this is now the start of a monthly bull market. I haven't got that yet. This is just the start. So my thinking here is what happens in the 10-year, in the weekly, holding quite well so far with 1, 2, 3, 4, 5. This is 4 weeks of consolidation since the high 5 weeks ago. I'm watching it. If there is a close in the 30-year below 27.60, and it's at 28.41 right now, I might have to say, you know what? Yields can go down again. Maybe our stock market is so weak that money is flowing out of the insecurity of the stock market into the so-called security and safety of bonds. We'll see how that's going to work out, right? In the meantime, on the day, the TLT hasn't gone up yet. It's still down 5 cents. I would have thought that with the market down 338 in the Dow, 42 in the S&P, that yields would actually have been lower, with quite a bit lower, as the TLT ran up as a safety haven. And that's not really the case at this point. So we're going to be watching it closely. Let's go to the next question that I got over the weekend, which was the XLF. What's going on? Why is the XLF weaker than the KRE? My answer, remember last week I was saying, my thinking, and it's only thinking, I don't really have statistics. I've read quite a bit about it, but really what you read is hearsay, and it's based on facts, but they are facts that are based on someone's bias. The real facts are that the monthly chart of the KRE, having gone to an F/C, this is a SPY, it has to be a regional bank, and the peak E that's possibly being made this week, still with very good technicals above the 9-period moving average, and the pullback today of 73 cents at 63.22 from a doji candle peak D high. Remember, another peak D. How many Ds do we have in the daily? It gives you a little bit. Look, here's the XLF. Look at the KRE. Look at the left side, the daily. Middle is the weekly. On the right is the monthly. Keep looking. Look how deeper. Not that much, but on the daily, a little bit deeper. On the XLF, down 25 cents at 28.62. But the weekly chart, that H pattern, that's, oh, I should have put it down arrow. The is in a sell mode. So I'm a little cautious here, thinking that the KRE will do better over a period of time because money's being loaned more to the regional banks than the money centers. Oh, it is going out. They're using the clients are getting better deals and more deals in the KRE. That's in the regionals. That's just my thinking. And you can see that we're a little bit more advanced in the monthly chart of the XLF. So I'm thinking the KRE is going to hold a little better. We'll see. All right. A question about Goldman Sachs. Goldman Sachs trading at down down 5 3/4 at 261.95. Got a pattern that heard here on TFNN, and a lot of people talk about it. The A to B equals C to D. This is not peaks or troughs. This is the lightning bolt formation, the down move. And then what I would do immediately is see, is there a Chapman wave potential for a parallel one-to-one extension? In this case, a downside extension. So let me just do this. Make that style single. Thick, we'll make it blue, make it weight is very heavy, and make it blue. It just seems to show up better. No, actually, you know what I'll do? Yep, I'll make it blue. I'll make it blue, and then I'm going to use this. So, yeah, we've got blue, and now we should see whether or not we've got another one here. There's a Chapman wave. One-to-one downside extension. It has to be parallel. In other words, it has to use pretty much the same number of bars to the downside. Now I'm going to make this a little bit, a TradeStation does this real nicely so that I can have colors and change a lot of things, the technicals. There you go. So there's the one-to-one, and that says 258. The 258s would be a downside target shorter term for Goldman Sachs if it keeps up this momentum to the downside. Now, I've got Goldman in the weekly chart that says it went to an unusual G in the weekly. I could rename it and call this a new G/B. I'll do that just on a purely technical basis. My thinking is it's more like a G. I think the MACD is turning down, but the week has just started. We've only got 3 hours into the day on the first day of the week, and the stochastics week at 76%. I'm thinking that Goldman Sachs is going to be the clue for me for the financials in leg C in the monthly chart. I think it's going to go a little bit lower, and I've got this area, that low that was made on the 2nd at 252.10. A close below that says it should go for the 200 average of 244. So, welcome back. Basil Chapman, Time Conditions Hour. Don't forget to call today, 779-276-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I was asked the question, would I take profits if I was in the XLF and I was up about 16%? And my answer is, I think so. You don't have to get out of the whole position. You got to think it's your business with tax consequences and all that stuff. I'm just saying, in chart formation, is it worth getting out now at 28.61 to see a pullback to say the 200-period moving average of 26.82, and then waiting 2 days to make sure that any bounce is really a decent bounce? Suddenly it's at 28.20. So wait a minute, I'm getting out at 28.62 and I'm getting back in at 28.80 or at 28.20 or maybe 27.50. Is it really worth the effort? So I'm going to say to you, right as we're speaking, I would immediately take off half and give myself a day or two to make a decision about, because the weekly and monthly charts, the weekly is suggesting so this is one of the reasons why over the years I've developed all these different techniques. Because if you had to rely on one moving average, just to say I relied on the 9-period exponential moving average, just a fantastic moving average. So here I am, I'm along the XLF. Actually, we've got a bank stock which has done exactly pretty much what the XLF is doing. So we've got the 9-period moving average. It's fantastic all the way into that beautiful high that was made the week of the 2nd of February in the weekly chart, 30.33. Then it gaps down, and that same week it plunges down to 26.76. So you're under the 9-period moving average. Oh man, we've just got to get out because you're under the 9 EMA. But wait a minute, the next week it opens at 27.96 and closes way up in the 29s. Oh, fantastic. Next week, beautiful. Holds the 9-period moving average. Beautiful. The next week, it closes under the 9 EMA. Oh my God, I'm out. Wait a minute, the following week it gaps down to 28.21 and then closes almost at the high of 29.72. I'm in. But wait a minute, the next week you can't do that. You've got to use other techniques. You've got to have. Are you going to use a Phillips screwdriver when you got a flathead? I mean, come on, you gotta have that. And that's the reason why I developed these peak Ds and Es, etc. At least it gives me another focal point. It is so important to do that. Look at the monthly chart, still beautiful above the 27.33 9-period moving average at 28.59. It is working. The MACD, it is working. Stochastic is turning down at 89%, still strong, but it's telling us look for a shorter time frame for clues, and the shorter time, the weekly says, whoa, the XLF, it's a little bit vulnerable here, but it isn't so vulnerable because the price is held, even though the technicals have failed, that I want to get rid of the whole thing. So I'm saying get out of at least half, keep a core position, because that's going to tell you when to get back in. You might be giving back some, but if you get out now with a 16% gain, it gives you a little bit of breathing room. So I hope that helps. So the next question I had was GBTC. This is that whole Bitcoin thing. It's the Bitcoin ETF. Yep, it got close to the 200-period moving average, trying to rally now. It's got the H pattern in the weekly chart. My thinking is that it isn't quite done. It's getting closer to a much better rally, but it isn't yet there. So, and the other thing is, look at the way these patterns have held, the arch formation. Look at the way this is the first period where we've had extreme volatility, but within the context of higher lows and lower highs and lower lows, those big moves to the upside have been met with selling. That means that's the reason why I said be careful at noon. If we fail to take that opportunity to have a bit of a rally, I don't know about a 2-to-1 move to the downside. We were at 320 or 300 at noon on the Dow. Wow, that's 600 by the end of the day. However, this is what I want to point out. And the reason why I want you to go short the Qs was because I was looking at, look, Adobe, very powerful stock, goes to a peak C the day, the 13th. That's a week ago. That's the day we went short the Qs. So it goes to a peak C, pulls back, and then I said that I'm expecting on Friday for a gap up, and that will be it for Adobe, because on a Friday gapping up to peak D, a leg D, which will turn into a peak D if there's a failure, leg D in the weekly, leg D in the monthly, says just be a little careful here. So here we are down 5 in Adobe, ADBE, trading at 220.37, down 5. Good chance that it's making at least a short-term top. Look at, actually there's one I'm not going to mention because we did short it today. So what else did I want to look at? I don't know how SQ is doing. Yeah, SQ has made a little doji top. This is Square, point of sale software, Square Inc., trading at 54.11, down 78. But it did make a new high. So I have to consider that this is a G/C. And it was only a C in the weekly chart. This is one of the strongest stocks, but it's the strongest stock for a reason. Unlike Facebook, which is being hit with heavy selling pressure, this is still one of the areas that's of most interest to people who are looking at high-tech stocks. Square Inc., point of sale software, managing receipts. It's great. I mean, we're looking at this. I want a big pullback so we can get in. I love this stock. Missed it before I actually spoke about it. Got a feeling we actually had this for a few seconds way back in the beginning. Let me see that. I can't. Oh, I haven't got it written in. Usually I write right on this on the stock what we've done. I can't remember, but I know it was on my focal list. Okay. So now here's the other thing. If you're looking at AMAT, AMAT, Applied Materials, it went to 62.40, all-time high. Peak E, 2-bar, channel wave 2-bar reversal. That is a particular technique that I have. A peak E in the weekly chart, if there's, no. It could be, let me show you. You see this pattern here? It went to a peak D. The actual buy turnaround point on the 30th of week of the 30th of June of 2017 at 40.79 was not taken out on this big pullback going into the week of the 9th of February. It went to 45.13 after hitting 60. It spirals up to a new all-time high, and that I'm calling at this point a peak E. I'm not calling it an A just yet, just an E. Everything about it, the stochastics at 89%, that's good, but the MACD just didn't, it's good, but didn't have the same strength. I'm taking a guess based on my work, let's say based on my methodology, to say that this is not going to be an E/A, not yet at least. I'm calling it an E, say Applied Materials is vulnerable leg E in the monthly chart. If you look at LRCX, this is Lam Research, LRCX, Lam Research, had the same sort of thing. It made a peak D in the daily back on the 13th. Yep, the 13th, it went to 234.88. It's trading now at 212, so 20 points down from that high. I don't know what to call this. This is the one that I said it did. Look, it went to a peak, a trough back on the July, the week of the 7th at 139s. It goes all the way to a G/C. It does not get to, and then it goes to, we've got a break coming up. I don't want to spend time on this other than to say that the semiconductors look somewhat vulnerable right now. When we get back to things that I want to look at for the day, a lot of people, I'm sure, are really interested in what's going on now. What should we do? I'll talk about that when we get back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So here we are. The VIX is now up 5 at 20.86, up 32% on the day. Is that too much, too little? What I love is that the VIX index, all the way from that high that was made back on the 13th? On the 9th of February at 41.06, plummeted down to the 13 level. It went to 1331 on the 9th of March. And up until Friday, where we had already dropped quite precipitously in the SPY, in the S&P, and the Dow, the VIX was ignoring. And even Friday, when there was that turnaround in the NASDAQ and the semiconductors, it just ignored it. Now it's starting to rally. It's at 20.79. That gives it a little bit of room. And that says to me a couple of things going on. Oh, yeah, in the den, Peaky mentions the Trin. I have my Trin gauge on flashing on Friday, which I said to subscribers, one of my Chapman Wave techniques. Watch out for an early morning down move in the Dow before any rally is attempted. We certainly got a down move, right? Nice indicator. Yeah, I'm not so worried about the Trin. It's kind of ignoring the market right now. It will wake up. But at this point, it's the VIX I'm interested in. If the VIX, by the end of the day, starts to break under 18, you'll have a pretty decent rally attempt in the market. If the VIX holds here and the market is not able, the Dow's not able to get to like a minus 275, it's at 356 right now. And the S&P, which is down 42, is only down maybe minus 32 to minus 28 mid-afternoon. Finally, you can get a bit of a bounce. If these things don't do that, you could have another very big selling wave. And I'll tell you why. Because this is the first time you've got stocks like a 10-bagger, Facebook going from the 18s to over the 180s, pulling back, hit 195 quite a few weeks ago, trading now at 172, hit the 200-period moving average. When you start to get the biggies coming under pressure, that tells you that you've got to be careful, and that's what I'm saying. So what do? You know, I'd lighten up if I'm long. I'd lighten up a little bit. I've been talking about building up a cash position for about 2 weeks now. I don't see any reason why you just try to have some cash ready for those stocks you've been dying to own for a long time. Have two positions that you put on. One is reasonable, one is outlandish. You should never get there. Maybe it gets there. Who knows? I'll be back tomorrow to discuss more. Have a great day.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.